Hi friends, so today here we are to welcome Mr. Ravi Anand. Ravi is a full-time realtor and person with the great financial services background as well. And Ravi will provide us some information about some investment options related to real estate. He'll also explain us about the pros and cons of different options and what we should be watching out for when we are entering into investment in real estate. So, Raviji, most welcome to you to our program. Uh,
Uh, thank you, Sanjeev ji, for inviting me to this program. Um, I'll and welcome everyone to this webinar. I would like to introduce myself first, and then I would like to share what I'm trying to explain today, based on my experience, based on some logical explanations, and also I have two case studies that I would like to do in this presentation.
that
So
sounds very promising. Yep.
yeah. So let me share my screen, and then we can go one by one. Okay.
Perfect. Yeah.
So regarding my introduction, so I'm a real estate agent. I'm active in real estate as an agent for last 1 year. Prior to this, I have about 20 plus years experience in corporate banking. I have dealt majorly with a large corporates and institutions, including oil and gas, TMT, diversified industries, and trade finance. The last 5 years, I have been extensively engaged in real estate financing in all segments. That includes land financing, office, industrial, and more importantly, the condominiums that we call it pre-construction. I was a relationship manager and for a foreign bank, and I used to finance the builders, high rises, low rises, were most of my portfolio. Um, and I had I am an investor myself. I do invest in residential properties and also do investment in commercials. Uh,
That's very interesting, Regine. I must say that there are not too many realtors who can claim to be knowing what's happening in the background in terms of financing of these mega projects. You have that view. Also, I see that you also have an investor, so you understand exactly what an investor is looking for.
Exactly. And Sandeep this presentation will be more focused on what happens behind the scene
Okay, perfect.
and how it will affect a buyer and an investor.
Mhm.
And that's why I thought I'll share some of my experience. And we have also some case studies I would like to share, which will
Yep.
give you some insight. Basically, the idea is that you should know what you are getting into in pre-construction and what exactly and how exactly you can negotiate with the builder, realtor, or the lawyers. So
Perfect.
uh, in terms of agenda, so I just briefly introduce myself. We will talk about like what is the life cycle or what is the typical life cycle in a pre-construction project, and more importantly, how it can affect a buyer or an investor. After that, we will go a comparison of pros and cons. So pre-construction and resale both have their own pros and cons. So that we will have a checklist so that you know that what you are getting into, what are the pros and cons for the pre-construction and what are the pros and cons for the resale. Usually pre-construction, most of it are bought by those people who are either investors or who are not, or the who are people who don't have the down payment and upfront, and they need some time to prepare for the down payment. Then we will go a step-by-step process. As somebody comes to you for a investment in a pre-construction, how would you evaluate any pre-construction project? No matter it's a high rise, low rise, or even a home, is a single family home. Then we will do a case study. This case study is based on APS. What are the points that you need to look for a APS? Any APS is anyways. It is my recommendation to get the APS vetted by your lawyers, but at the same time, there should be some inherent risk that you need to know and where to look for. We will do another case study that how do you calculate as an investor when you invest, how do you calculate the ROI, and how the deposit structure can increase or decrease your ROI. And also when the builder gives you a calculation of profitability or ROI, what are the things or what are the assumptions that you look for? And after that, I'll open the forum for Q&A. If there are any questions, please feel free to ask on the floor.
Thank you.
So this is a typical life cycle of a construction project. Most of you would know this anyways. So basically, what the builder for any construction project, the builder needs a bank financing. No builder does the construction on its own cost. For a bank financing in Canada, the banks typically require anywhere between 60 to 90% pre-sales to be done before any financing takes place. And that's why it is very essential for the builder to do the pre-sales, right? And one more thing is that a lot of people think that a pre-construction is cheap compared to the local market. It goes the other way, because builder is selling the project based on the price which he expects to be on the completion date. It can be 5 years, it can be 10 years, depending on the construction timing. Now, a typical construction project takes about 5 to 10 years. Now, the risk that investor takes is from the date the pre-sale is done and the closing, and that can be typically between 3 to 6 years. These number of years may vary depending on how big the building is, how many units are in the building, how complex the construction is, are there any delays in the construction, if the construction or the contractors are owned is in-house or captive by the builder,
Okay.
or they are taking any external help. Most of the time, the builder refinances or take out his equity at the time of land financing and at the time of pre-construction, pre-sales. Sorry. So at the time of pre-sales, most of the equity that the builder would have put in land is already out. After that, whatever he is able to sell is a profit. That is something that you need to know. In pre-construction, there's a difference between occupancy and closing. So there can be some delays between the occupancy and the final registration and closing. So occupancy is a time when the building is complete, but the city has not given approval for the builder to transfer the asset to close the financing, close the deal, and hand over the unit to the buyer. So the investors may be required to pay the rent at the time of when they occupy the building till the final closing or final registration.
Interesting.
Now, these are the typical pros and cons for any pre-construction project. The pre-construction project usually they have some certain advantages. One is that it's a newly built property. If it is a newly built property, then there's a tear-in warranty which is available to you. So some of the things are covered for 1 year, 2 year, and 7 years, depending on. So there are a huge list what is covered and what not covered. Typically, any structural issues or any structural defect is covered for 7 years. Any new building built after November 2018 is exempt from the Rent Control Act. So as an investor, or as a landlord, you can increase the rent any number of times after the initial term of the lease, right?
Okay.
Most of the investors go for pre-construction because of assignment option. You need to see what are the assignment options are there. And if you have a silent option, typically you sell the unit before closing. You don't need to do the closing,
Okay.
so your returns will be higher. Then pre-construction has a staggered payment option. You don't need to put entire the deposit upfront.
Mhm.
In pre-construction, usually the builder, there will not be any competitive or blind bidding. So
Okay.
there's a fixed rate that the builder displays, and that is the rate for the unit.
Right.
You will expect a higher rent because of new building, new unit,
Mhm.
and also the exemption from the Rent Control Act. Any new building will usually have a less maintenance fee, but this may change depending on how many amenities that the building has. If
Mhm.
the building has too many amenities, the maintenance fee can be higher. But if let's say the building is standalone, uh, or with usually gym and swimming pools and all with less amenities,
Mhm.
then the maintenance will be low.
I see.
Uh, this is the most interesting part. This is a 10-day cooling period. So any pre-construction sale is a very high pressured sale wherein you need to sign or you need to book the unit instantly.
Okay.
But after that, you have a 10-day cooling period where the builder is required to give you the agreement for purchase and sale and the disclosure documents. You have 10 days to review those and get it reviewed by your lawyer. If you don't feel comfortable or you don't feel satisfied, you can always cancel the contract within that 10-day cooling period. If you don't take any action within that 10 days, that 10-day period, then your agreement is firm. And again, due to various assignment option and staggered payment options, and the new building, your return on investment will be higher in a pre-construction.
Sure.
So at the same time, there are some disadvantages for the pre-construction, and the biggest one is the uncertainty of the future term. So as I mentioned before, the investor takes about 3 to 6 years of a tenor risk, right? And during this tenor, anything can happen. The investor can lose a job, the investor may not qualify for the mortgage, or the market turns,
Mhm.
the market, there can be a recession in the market. So
Okay.
that is the risk that investor is taking.
Okay.
Investor also or a buyer also pays the tenor premium. So let's
Mhm.
say, the buildings are never sold at cheap, right? So if you
Mhm.
compare the per square foot rate that the builder is offering you, it
Mhm.
will always be higher than the current resale market, right? And
Mhm.
the premium can vary depending on what is the tenor when the building will be completed.
Okay.
So
Yeah.
builder never sells you anything cheap or on the current market price.
Mhm. Mhm. Mhm.
Usually, all the builders, there will be a lot of uncertainty in taxes, levies, and closing cost and finishing, and that is something is adjusted in the final price. So, as an investor, you will not know that what is the total amount of closing costs or the taxes which will be required to pay at the time of closing, depending on the how far the closing date is. So you should as an investor, you should always keep some buffer
Mhm.
to arrange for additional amount or additional buffer for any increase or decrease in the closing cost. Uh, Again, during depending on the tenor of the close construction, there can be frequent amendments to the APS or new disclosures by the builder. But again, any new disclosure which is material, and I'm quoting material, you
Mhm.
will again have a 10 days cooling period to accept or reject that amendment.
Could you
Uh,
give an example of a major amendment, Ravi?
right. So the let's say the major example for the such amendment is, let's say, if there's a change in a plan. So builder gave you some layout or some floor
Okay.
plan,
Okay.
and the city didn't approve that floor plan. So builder had to change the floor plan, right?
I see.
So
Okay.
if that happens, the builder will come back to you with a amendment.
Okay.
Similarly, let's say if builder has promised you some appliances which for a specific brand, specific
Okay.
size, or
Mhm.
specific cost, that is not available at the time of closing or it's out of the market. The builder will come with you with the amendment. So these are the changes or amendments that can take place.
Sure.
Uh, any agreement purchase and sale is drafted by customized and drafted by the developers or lawyers,
Okay.
and it will always be very biased towards the developer's interest. So you have to, in order to secure yourself from any potential legal litigations, I recommend always to go with a review with your own lawyer. As you know, that land prices increase over time, right? So if land prices increase over time, the builder will incur higher cost, and that's why the units are sold at a premium. At the same time, the number of units that the builder develops develops or creates, the unit size will be smaller. You can compare when compared to existing resale unit. There can be, even during this pre-sales event, you will be talking to different people, including the sales guys, from the builder, from the lawyers, from the realtors. So there, I feel that there are high chances of misrepresentation, and more specifically when it is, it will be a future event, right? There's nothing concrete or no tangible asset on the ground. So you need to be careful. So make sure that anything or every information that your decision is based on is documented in or registered in a EPS. Usually the builder, releases the unit phase by phase. They don't want to release or open the units for sale for too many, too many, and show the market that they are not selling. So you'll always have a scarcity, or builder creates a competition. So you will always find that the inventory is very limited in any pre-construction. And one of the most worst part, or the thing that doesn't gel with investor, is like, if the project get canceled for any reason during the tenure, the buyer incurs the opportunity cost. There is very limited compensation that the builder will provide, or the interest on your initial deposits. So at that time, if you're going to buy a new unit at that price, you won't get it because the market would have surged. So that the buyer incurs an opportunity cost depending on when the builder decides to cancel the project.
Very interesting. Very detailed. Very nice.
Sorry, yeah. Against that, the resale has their own pros and cons. So basically, you have a tangible asset on the ground. What you see is what you get. There is no speculation. What it can be. The resale project is ready to move in. It's a firm deal. Most of the resale deals, if there is a default, the onus is usually on the buyer, and the most of the time it gets on default when when the buyer is not able to arrange the mortgage, or there is some change in the financial condition of the buyer. There are very limited scope when seller is defaulting, and one of the more prominent one is if the property is tenanted, but the tenant doesn't leave at the time of closing, so buyer cannot take a possession of the property. The legal documentation for any resale project is very standard. It's a 5-page document, and it is not biased towards the buyer or the seller. The resale project will have usually larger units, and you have a better inventory around that area to choose from. Now, as the resale unit is already in place, you can rent it out, or you can move in the moment you close and get a ready possession. So you have a faster rate of capital recovery, capital in a sense, the 20% down payment that you make from your own pocket, and you start getting your returns immediately. The disadvantage is that you need a immediate down payment against a pre-construction. There's a limited warranty or a no warranty for a pre-construction, for a resale, depending on the age of the building. So as I mentioned, that the tariff provides you warranties for certain defects between 1, 2, and 7 years. That warranty, is transferred with the ownership. So if you have, sorry, so if you have a property which is 5 years old in resale, then you will still be eligible for a 7-year warranty that Tarion gives. This is, you can be a competitive bidding process depending on the market. If the market is a seller's market, then there will be competitive bidding.
Okay.
In depending on the age of the building, you will expect a lower rent compared to pre-construction. It will also have, again, a higher maintenance fee. The maintenance fee is higher for resale depending on the age. If the property is 20 years old or 25 years old, it requires frequent maintenance and maintenance bill is higher. So your maintenance fee for you will be higher. But again, if the property is just 2 years old, the maintenance fee can be lower. But in any case, and then also depends on again, maintenance fee also depends on the amenities.
Yeah.
There's no cooling period for the firm deals for resale, and usually it will have a lower ROI. But again, that depends on the market and market demand. In the current market, let's say for GTA, the rentals are so high that there's a lot of scarcity in the market, and any property you buy can be rented.
Yeah, that's true. That's true.
Yeah.
Just a question, Ravi. So, like the discussion that we had, is that applicable mainly to the pre-construction condo buildings, or is it also applicable for the pre-construction, say townhouses or like
It is applicable for all the pre-construction.
Okay, right.
The tenor for townhome is
Yeah.
Less compared to tall buildings.
Sure.
So typically, let's say, townhomes can be completed within 18 months to 2 years.
Okay. Yeah.
Right. But the basic fundamentals applies to all pre-constructions.
Perfect. That's good. Thank you.
Okay, so how would you evaluate a pre-construction project, whether you need to invest in or you not, right?
Okay.
So first of all, and first thing first, you need to define your financial and investment goal.
Mm-hmm.
You need to prepare your strategy for short term as well as long term. You can seek help of your accountant, a financial advisor, realtor, or the lawyers. There are various avenues for investments, such as, let's say, real estate, stocks, government securities, insurance. So you need to analyze that what risk and what returns you need, and against and what risk you are prepared to take.
Yeah.
So depending on that, you need to devise your action plan. So you should devise action plans such as you will invest so much money in real estate, so much money in stocks, so much money in insurance, in government securities. That way, you need to devise your budget. Now, if you feel that you are ready for a recon or pre-con or pre-construction, you should first review all the market materials that the builder has provided you, right? After that, the step 2 is to check the builder's background and their reputation. The builder's background and reputation can check through various ways and various avenues, but you can always check is on the Tarion website. So Tarion is a government website which provides all the details and history of the builder, how many projects they have done it before, how many claims are there, how many investors have sued them before, has there been any delays, if the delays are there, how long. So depending on the number of projects the builder has, how many active projects are there, how many past projects are there, everything you will get on the Tarion's website. Sometimes there can be some delays for the Tarion to update the records, but more importantly, if the builder is very seasoned and all, so you will get most of the details, let's say, within a gap of, let's say, 6 months to 1 year.
That's really great information. I never heard about that kind of website for.
Oh yeah, it has a lot of information. It had also information like what units has deficiencies which the buyer have claimed for, and whether builder has rectified it or not. So it is a very good source of information. The other information that you can take from this social medias or news network, Any negative news on the builder over the past 5-10 years. So usually I feel that in my experience, the real estate is a cyclic industry. So any builder or who has survived or 2 or 3 cycles, let's say 23 years, 20, 30 years in this business,
Right.
would have a good reputation. After that, in the step 3, you would conduct a market analysis, comparables, like how many projects are there in the market, which and at what price they're available, at what areas they are available, and also you should compare with the resale. Like in resale, how much, how the price of the pre-con is compared with the resale value. Usually you should do a per square feet. You should do based on availability and all type of analysis you should do. Yeah. If it is not possible for you to do the analysis on your own, you can always seek realtors' help because they'll have more access to the data than resources.
Okay. Yeah.
You can also do a financial analysis on if you're an investor on the return of investment. You can always take help from a lawyer or accountant to revalidate the numbers provided by the builder and do an ROI analysis.
Right.
Then you should prepare a questionnaire for the developer, realtor, and lawyer. You should know what questions to ask the developer, realtor, and lawyer. And if possible, fix an appointment with the developer and go with your realtor and the lawyer to ask intelligent questions. Now, usually these pre-sales events are very high-pressured sales. So if you're satisfied, you can sign up and book the unit. Because if you don't book the unit, sometimes the units will not be available, and any analysis you did before can go for will not have any use. Then after booking the unit, the builder needs to provide you the agreement for purchase and sale and the disclosure document within almost immediately. And your 10-day cooling period starts within from the date the builder provides you APS and this disclosure agreement. You need to review this APS with your lawyer, and if you're not fully satisfied or if you have any concerns, ask the questions to the builder, ask for clarification. I would recommend the question should be asked in writing on email, and even then, if you're not satisfied, you can just cancel the agreement and request for a refund. There is no penalty charged if any for any breach of contract. If the contract is cancelled within that 10 days cooling period, so you get your refund in full. And during the course of construction, if there are any new disclosures by the developer, always review it with your lawyer before signing off. I had a recent example with a colleague wherein there was a change in the plan, and and the buyer didn't know, and he just signed off. And then at the time of pre-delivery inspection, they realized there's a big, stem right in front of the kitchen. I did some, some analysis on the, agreement for purchase and sale for a new construction project, which I was not part of, and I would like to share what information or what kind of technicalities you need to know about APS.
Right.
So the first thing is the deposit schedule. So make sure that deposit schedule, which is promised by the builder in their advertisement, is written and structured properly in the agreement for purchase and sale.
Okay.
The timing, the tenor, also the penalties for not making the deposit on time.
Right.
The assignment clause is most important for any investor who doesn't want to close the unit or doesn't want to own the unit and want to sell before the completion. The most important thing in the assignment clause is that any assignment is subject to a builder's consent.
Okay.
So, and this is true for almost all the construction. There can be various fees to assignment. Sometimes the builder charge $10,000 a flat fee or $15,000. Sometimes they charge as a percentage of the sale value. The assignment clause can be with some conditions. And also that even if after all this, if the building is not sold fully and builder is still selling any units in the building,
Mhm.
you will be, and you are going to assign uh, to your unit to somebody else, you are directly competing with a builder at that point of time.
Okay.
So builder will not allow you to do an assignment, and that's why all the assignments are subject to builder's consent. Other thing also on assignment is that if even if you assign your unit to a new buyer, if that buyer doesn't close on closing, you can still be on the hook. So the assignment can be with recourse or without recourse. That you need to verify in your agreement for purchase and sale. The levies and taxes, verify that usually most of the builders, any increase or levies of taxes will be will be passed on to the buyer or the
Okay.
or the investor. So make sure, see if there's a cap on it, if builder takes any risk, uh, and accordingly you can plan for any cushion for the closing cost. Then any alteration upgrades, see the
Mhm.
policies where the builder can alter or do any upgrades, change in any upgrades.
Okay.
You can negotiate that. Usually, if builder has promised you something, let's say some appliance for a particular price, and that is not available at the
Mhm.
time of closing, the builder can always replace that appliance or that appliance for a same quality or a better quality without your consent. But if they are giving you some inferior quality, then they need to take your consent, and again, your 10 days cooling period will be
Started.
able to protect you.
Okay.
Make a note of a difference between the tentative and a firm closing date. A tentative closing date can be changed and extended by the builder any number of times during the course of completion,
Right.
but a firm without any penalty. But if there is a firm closing date, the builder cannot change it without giving you any compensation.
Okay.
So make sure what is the firm closing date. The tentative closing date is not in your interest.
Got that. Okay.
PDIs stand for pre-delivery inspection and a
Mhm.
site visit.
Mhm.
You're allowed as a buyer or investor to visit the site, and also before handing over the unit, on closing on occupancy, make sure to note down any discrepancies or defects in writing to the builder and ask for either a compensation or a fixation before you close. If builder fails to rectify those defects,
Okay.
you can claim compensation against your Tarion insurance.
Right.
The occupancy period, especially those who are the investors, during the occupancy period, you need to know what is the rent and maintenance you will be paying on occupancy. And more importantly, for investors who sometimes the builder don't allow the buyer to rent um, to rent that unit to a tenant during that occupancy period, because during the occupancy period, the builder is the owner of the unit. He can be the landlord, not you. So you need to be careful and read the clause of occupancy period rent um, in the APS, whether it's allowed or not allowed. And last but not the least, make note of this default and delays in case there's a delayed payment on your deposit. The penalties are usually very severe, so you need to be aware of it, and it will be documented in the APS. So these are the few things that I thought I should share with you and that you should put your attention.
Okay.
But irrespective how good, how you did the review and all, it is a best practice to engage a lawyer to review the APS in detail, It can be between 30 to 50 pages long APS, drafted exclusively for the benefit of developer.
Sorry, if I can ask a couple of quick questions on this slide. One
Yeah.
is you mentioned about the lawyer review. So if we get the lawyer to review the agreement for purchase and sale, and the lawyer has, let's say, a few caveats or warnings regarding some clauses, is it common or is it to be expected that developer will make any adjustment for me as as one buyer, or like basically the option would be not to go for that? It is not like usually much
Uh,
negotiable.
as I mentioned in my previous slide, that pre-construction is a must for a developer, and
Okay.
he needed for so it is in his interest to close the sale
Okay.
to get the financing. Now, depending on the market, if the market is very hot, it's a seller's market. The units are sold in hours, I would say, or right before they launch. So if there's too much of demand, the builder may not agree for a negotiation.
Okay.
But I have seen in most of the cases that the clauses are changed or negotiated by the lawyer and the builder in
Okay.
most of the cases.
So
So
like they may negotiate for one individual buyer. They don't have to make changes across
yes,
for all the
they
buyers.
can.
They can. Okay, they make changes. Okay.
Yeah.
Got it.
So
Okay.
then, especially in the buyer's market, I have
Okay.
seen the APS have been, and that's why I suggested that you go with your realtor and go
Okay.
with your
Yeah.
lawyer. So then the builder would know that they are talking with an informed investor.
Right. Sorry, one last question on the slide. Number 7, occupancy period rental. So, is it that the builder or the developer may want to rent the buyer if the buyer himself wants to stay in that place, but they will not allow them to rent it to a third, to their tenant? Is there
That's
like any
that.
difference? Okay.
Yeah, that's correct. So the thing is, unless you, so the thing is that unless the unit is closed and sold to the buyer, bank will not finance the buyer,
Okay.
and builder doesn't get the money to repay his loan, right?
Okay.
And
Yeah.
he will start incurring the interest on the loan.
Correct.
Now that's why builder lets the buyer to occupy the unit
Okay.
and pay rent and the maintenance fee
Okay.
during that between occupancy and closing, and that will pay for the mortgage for the builder, right? So that's why they will allow the buyer to rent the unit,
Okay.
but at the same time the the buyer is still not the owner of the unit, so they can't be the landlord.
Got it.
So
Understood the difference. Thank you. That's a very fine difference.
um, uh, and this is the case study of a new resale
Mhm.
which is currently in process.
Okay.
Sorry, in the market.
Mhm.
So which gives you a flexible deposit structure. So as you can see, against the 20% deposit, the builder is okay. Builder has given some incentive, and uh, you are only required to pay 10% deposit
Okay.
within 180 days,
Right.
and the remaining 5% on the at the time of occupancy, right?
Yeah.
So
Yeah.
this is a 2 year. This is a project in Oakville,
Okay.
known as the Post, where the developer is Green Pub. They are giving you 2 year free maintenance and no taxes. They are also covering you additionally to for your mortgage, so that your effective mortgage interest rate for the first 2 years from closing will be 2%. They are giving you discounts on parking. There's no assignment fee, but mind it again, even if there's no assignment fee, the assignment is conditional on builder's consent.
Okay. Right.
The levies are capped here for 6,500 and 9,500 for two bedroom and for one bedroom and two bedroom respectively. So that gives investors some cushion on the closing cost, right?
It is. Yeah. Very interesting.
And the reason why they can, sorry, come again.
No, I'm saying very interesting is attractive.
Right. And I can tell you why they are able to cap it, because this is a low rise 8-story building they are expecting to finish this building within 2 years. So within 2 years, they're not expecting a very huge gap in the levies or the government taxes, right? So that's why they're able to cap it. This is the worksheet that is provided. This is for sample worksheet for a one-bedroom, $620,000 unit, which is 522 square feet for this unit, the post. So this is the calculation the builder give you, and usually the builder will give you this type of calculation, especially when they are targeting the investors. Right now, as an investor, I would like to show you what. So basically, this is showing you that there's a 2-year free maintenance and 2-year free taxes, and how it ultimately gets you an ROI of 26.9%. Right. So as an investor, what you should look for and where you should put your focus on when you are calculating the ROI itself. First, the ROI. If the ROI is attractive, let's say if it is bigger than or better than your other investment options, then the investor will have that interest. Now, you should also see the incentive, that is a 2-year fixed 2 years mortgage, and how they're able to do it is basically what they're saying that for the first they are calculating that they're calculating the difference between the 5.69, which is the current interest rate, and the 2%. So what is the differential is in the mortgage payment for the first 2 years, that is 1025. They are giving you a refund at the time of closing. So let's say in this case, based on $620,000 unit, you get a mortgage of you need a mortgage of 80%, which is 496,000. Based on 496,720, the differential or the 3% is $41,000. Okay. They will either adjust this price at the time of closing, or they'll give you a check.
Great.
So basically, you are making $41,000 upfront, and on a $620,000 unit. There's also 2-year free maintenance and taxes, and the builder is including the entire cost as a cash flow for the first 2 years of closing. This is the 41,000 net, and then this is for this. You have to, if you see this $630,000 unit for a 1-bedroom, which is now this is 522 square feet, right? So for a 1-bedroom, 522 square feet relatively is smaller. But again, as an investor, you have to look for what is the appreciation over the next 2 years, or what we expect the appreciation would be, and whether compared to that price, what is available, in that local market. And this is the way how you calculate the returns on investments is always calculated on your own investment. That is the down payment that you make, and in this case is 120,880. You also need to make deep dive into the assumption for builder's calculation. So here in this case, builder is assuming that after 2 years, the rentals for that type of unit will be $2,200 at least, and which I think is very reasonable. If you compare the current rentals in that for a one-bedroom unit, it can be anywhere between 2,300 to 2,700. Yeah. So that is the way. How do you analyze as an investor? If I'm opening the floor for any feedback or discussions, or any questions.
That's really amazing, Ravi. So this is a project that the one that you mentioned is still open. Is they're still accepting applications.
Yes. So yesterday, I went to the sales event with one of my clients, and they have. What I was told that they have available inventory in 2-bedroom units and above. or one-bedroom units are all sold out.
Oh.
And usually the one bedrooms are usually the fast selling items, which most of the
Yeah.
investors will look for.
Yes, yeah. That's great. And I'm assuming that as a realtor with the summit, you must have access to many other pre-construction projects as well across different geographies.
Right, that's correct. So as a realtor, we do have access to new constructions for such as downtown Mississauga, per se Cambridge.
Okay.
So in all over location, almost a lot of builders, developers, they cooperate with the realtors. Some don't. So we'll have access to those ones who cooperate with the brokerages.
Great. Okay.
So I do have other projects as well in downtown and for the nice good builders with a good background, and we can have a discussion if you're interested.
I'll just read out your cell number here for in case people are listening on the audio mode. So 647 641 8759. 647 641 8759. That's your cell number.
And I also have a website, realanand.com. You can also reach me out or any of the social media.
Realanand.com. Okay.
Yeah.
Amazing. Thank you so much, Ravi, for bringing all that information. And there's a lot of things which I was not aware about in the past. Like I've heard of some things, but not really understanding the details about those. So very, very informative, and you've been very objective in that analysis. You gave the pros and cons. So you're not painting a full, just a rosy picture for everyone. I think you've been very unbiased in presentation of the information. And that's appreciated, by the viewer of this information. So thank you so much, Ravi. Is there anything else as a final parting thought, or will?
Thanks, Sandhiji, and thank you for having me on this on this webinar. If you have any specific situation or you need any specific advice or friendly advice on any of the projects, can you reach out to me anytime. I'll be very happy to help wherever I can.
Okay, so you mean say like without any obligation?
Yes.
No expectations. You are happy to answer and advise.
I will be very happy to guide you. I'm not a lawyer, definitely, but I'll be very happy to give you friendly advice without any obligations.
Perfect. Great. Thanks so much, and we'll see you then in sometime later again, hopefully with another topic and more information on that. Thank you very much, Ravi, for your time, and appreciate that.
Thank you, Sandhiji.
Wonderful day.
Thank you, Sandhiji.
Take care. Thank you. Bye.